All right, good morning, everybody. Welcome to Stock Analysis Friday on this July 12th, 2024. Great to have everybody here. All right, Stock Analysis Friday is all about stocks you want me to look up. And basically, I analyze those stocks using our proprietary software. A lot of you know that already, called the ART trading software. And I'll give you entries and exits and risk control. Also, too, go ahead and type your stocks in caps for me and do that in the comments area. And then we'll get started as soon as I go through some of the administrational items. Ongoing next week, I think we're going to probably pull these back a little bit in time. I think we're going to go about 30 minutes instead of the hour and 20 minutes. It's getting a little long. So I think I'm going to do that. So I think today starting, let's go ahead and try to put 2 stocks in per person. So pick your best stocks and let's get those in there and take a look and see how we do with the time, okay? And then if we have more time, you can put another 2 in, but we want to try to keep the time a little bit lower than it has been in the past. All right, let me go through some administrational items and then we'll start the clock for today. All right, so first thing is to talk about the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand, but you need to be aware of the risks. All right. And you have to plan for those. And I've written a couple books on that. So if you don't know how to do that, I can help you with that. It's all about risk control. And also to trade with money you can afford to risk, called risk capital. Check with your financial advisor or whoever manages your money. And that the important part of that is they know your personal situation. I don't. So don't take any trades here until you check with them to be sure they're suitable for you. There's no guarantees in trading the markets. All right. It's a tough racket, right? So you have to have really good risk control. It is possible to lose some or all your money, especially if you don't know what you're doing. And you have to keep that in mind. Risk control is as equally important as, of course, entries and trading systems. Now, a couple things. For those day traders who are learning how to trade, an excellent place to go is some prop firms. I'll talk a little bit more about that in a minute before we get started. But the prop firms, basically, you start out with a simulated account, and then you move forward once you're good and can get profitable. You move forward and then get a funded account. So it's a great way to get your feet wet without really having to have risk capital, or at least not risking your own capital. All right, so books, like I mentioned, a couple of money management. My new book, The Art of Trading, coming out this year. My last book was in 2008. Yes, we've been doing this a long time. We've had traderscoach.com now for, 36 years close. We started in 1998 and incorporated in 2000, so we're not newbies. We've been around the block. I love some of these people on YouTube that are about 18, 19 years old, master traders. What a bunch of BS, right? Okay, so this is a tough business. You have to prepare for it. You have to know what you're doing, and it takes time and experience in the markets. All right, so risk control, really important. If you don't have good risk control, you're going to be in trouble. But anyway, we can help you with that if you are interested. Also, too, software that I've developed over the last 30 years, ART, AL, PTF, TLM, and ERI indicators, along with scanners and risk control software. All right, now here's a little bit about the prop funding. Apex is the one I recommend. It's been around the longest. They actually do pay out people, so that's kind of important. I have some Apex prop accounts. I think they do a really good job. You can see this slide is probably a couple weeks old. They have new numbers if you go to their website. But when I took a picture of this slide, the average monthly compensation since 2023 to its traders out there was 11 million. Since 2022, 182 million. In the last 90 days, it's been 70 million. Here's some results I had during our day trading room on July 9th of this past week. So you can do this, but you have to learn how to do it. And it takes time. We're going to develop a whole tutorial here in Tucson, Arizona on prop trading and how to do it and what techniques we use. All right, and then finally, give us a like here if you can. And of course, we're probably already subscribed, so we appreciate that. On the prop firm, let me just put a little thing in the commentary if you're interested in trying it out. We have a coupon available, so that's up there as well where you can get a discount. All right, let me come out of this. Go ahead and type your stocks in. First one I want to take a look at Bitcoin. Let me just explain a little bit about what you're looking at. If you're new here, our veterans here, just grab a cup of coffee and come on back after I'm done with this. In any case, we got the scanners up here. We're not going to use those today because you're going to give me stocks. I don't need to search for them. Also, too, we have 3 time frames. I have the 60-minute over here, which is our short term, the daily, which is our intermediate, and our weekly, which is our long-term time frame on the right. So this is called multiple time frame analysis with my software loaded on the charts, and we analyze this information on these 3 different time frames, obviously to give us a more exact entry to let us know what's going on in the different aspects of whatever we're looking at. We always put the same symbol up there, so we're just basically getting a broader view of what's going on with that market. The software is loaded. You can see our triangles. This is the ART software. This is the OWL, measures momentum and counts the Elliott wave. PTF telling us if the trend is over, 75% accuracy on that. Trendline Master gives us the trend real quick. And the ERI is the fear and greed when it gets too far away from an orderly trend. So that's kind of what we load on all the charts, and we take it from there. Now, we also have the 200-day moving average. I really don't use it too much, but a lot of people like to see it there, so I put it there. Okay, so here's what we got on Bitcoin. So if we take a look at Bitcoin when it started to really move up, we're going to go back to 2023. A lot of our recommendation came at the around the 10,000 mark. Okay, on this, so we were able to get a pretty good entry pretty early on, and from there it's taken off. But now we're in a correction, and so if you're into Elliott wave, this is unmistakably an Elliott wave 3. Looks like we have an A, B, C now that has developed. This is a profit-taking wave 4. After wave 4, we should get a wave 5, which continues the trend and should go above wave 3. So notice I use the word should. I don't talk in exacts when I talk about the market because everything is probabilities in the marketplace. So price has got to prove the forecast before we can say something has really happened, right? So in any case, there was a possibility that this was an ABC bottom before. If you remember from some of our previous webinars, we were hoping that was the case, but it never got above B wave and instead sold off again, which was a clue we were going back into the target, and this was a broader based ABC. So that's kind of where we're at now. Yeah, we hit the target, but here is a problem I see. We've got a red PTF, and again, 75% accuracy, calling for a lower low back around 54,000 at least into the Bitcoin. So we'll see what happens. If that indicator abruptly turns green, then we probably have a bottom in, but if not, we're probably still coming down a little bit. I think we're close to a bottom. I mean, we're at 57, so what, another 4,000 maybe to the downside, maybe a little more, okay, because the bottom of that target is 43,694, so it's not inconceivable we could go into the lower part of that zone. So you don't want to jump in right now. I'd wait it out a little bit, and I think you'll have a great buying opportunity a little later in the summer, and then take it back up on the final leg up for a while. If you're holding it long term, well, you've suffered through the correction, and I guess I would continue to suffer at this point, okay? Long-term charts are bullish, so there's no reason to not hold this for a long term, so I wouldn't panic out of the position. But I think you got a little bit more pullback before we start to see some bullishness, and then it's going to take a while to start to climb back up. So you're probably not going to see new highs until next year. Maybe could start this late fall or summer. We could start to move back up. Depends how lower this correction goes before it turns around. All right, so that's my quick analysis on Bitcoin, and let's jump in now. We'll start the clock right now. All right, thank God it's Friday. I think that's what you mean there. I don't think that's a symbol. Let me know if that's a symbol. I'll type it in, but I don't want to look like a fool and type it in and not have it be working. All right, let's go here. Kumar. Okay, this makes sense. AMD, there you go. All right, so AMD is the first one. I'm long and hold these stocks. Okay, so a lot of folks out there are predicting a crash right now. Okay, we've had the high in the market. I don't see it that way. All right, I see we're close to a top, but I don't think we're quite in there. I know Harry Dent is basically calling for Armageddon. And I don't necessarily disagree with him, but I don't think it's happening this summer. I think maybe in 2025 we're looking at it. And he has mentioned that a couple times, that date. But anyway, I think for us traders, we can follow the trend, and the trend is still up, right? So in any case here, Kamara, AMD looks fine to stay in it. I mean, look at the weekly chart on the far right. We had a pullback. We don't yet have a red. The only thing is on this pullback here, we've had a pullback, a minor pullback inside the wave 3. But if that owl goes red on the weekly, that means we're probably going into a more longer term pullback. And so probably if that's the case, then we'd redraw these and we may go back down a little further. But, you know, it's not red yet. So let's see what happens with that. In any case, even if the owl turns red here, PTF's still green. So I would hold it. Okay, we've held it through this little pullback already. I would put, let's see how it looks like it's surging forward now. So probably going to possibly make a new high. We've got a green PTF on the 60. So I would definitely hold that. Okay, for right now. Let's take a look at NVIDIA. All right, and thank you. We'll take a look at Tesla too. Remember, Tesla was on our watch list last week. So we kind of do want to keep an eye on Tesla to make sure it's going to perform, because we're close to going long in that. So let's take a look at that. All right. So again, hold this. No reason to get out. All right. Look at the wave 3 owl on the weekly chart on the far right. Huge. Yeah, you get a pullback, but this is a long-term hold right now. All right. And they got a green PTFs on both the daily and the weekly. Okay. So it looks good. All right. Let's take a look at the exciting one here. Tesla. All right, so Tesla, we were kind of waiting for a pop, and boy, we got it. Look at that. So we got that. But here's what we looked at. When we showed up last week, if you go back 5 price bars, because that's where it was last week, notice we were kind of saying, let's wait for that pullback, and we drew in these fibs. Actually went a little higher, so we're drawing those fibs a little higher up there. Okay, so we're kind of in an area here where it's looking pretty darn good. I don't think you're going to get a red owl over here. So let's see. All right. This is why I like multiple time frames. Now, if I was sitting in front of my computer like I am right now, okay, and I was looking to try to get into Tesla, I'd kind of want to wait for the 60-minute chart to show me some more green over there on the owl. Okay. That way I kind of make sure maybe the pullback is done, because yeah, we've had a little bit of a bounce in the last, couple hours on this, but it could trickle on down. We didn't really go solidly into that retracement area, but in any case, you know, it's looking really, really good. We're very close to a green owl on the weekly chart, so that's looking good. And you know, what I'd like to see on the weekly chart, obviously, is a break above here. All right, because otherwise we're kind of still in this possible channeling. Now, you could go in now and put your stop way under here and just hold on to it. Nothing wrong with that. But the only thing is that it may be, if we get in now and it pulls back, you'll have all that money tied up waiting for the next surge forward, which I think you're going to get. So I don't think I think if you hold it long enough, you'll be okay. So if I was playing this, I'd probably wait a little bit longer and see what we can get in terms of a better price. You know, you might get, 10% lower price. In any case, you're going to want to put whatever you do, put your stop under here, okay? I'm trying to figure out if I want to recommend this one right now. I've got a little pullback. You know, I'm kind of thinking, you know, if it was me personally, I'd wait a little while. So I think I'm going to continue with this on the watch list. It's not quite ready, but it could be ready before next Friday. So I would keep an eye on it. Okay, hopefully that helps. All right, Jim, good morning to you, my fellow day trading buddy. How are you? Fun time yesterday in the room, huh? I enjoyed that too. Day trading room is great. Okay. All right, Kumar, thank you for hitting the like. We appreciate that. And Gene says thank you too. All right, let's see. Okay. All right, others are sipping the coffee and holding back. All right, or at the beach. That's not a bad place to be either, right? Oh, okay. What do you got? Give me some more stocks here. Boy, this is going to be a short one today. Somebody's got to have some more. All right. Well, let me throw one in while we're waiting here. All right. Here's silver. Okay, silver. Pretty excited about silver. You know, I want to show you even some of the basic forms of technical analysis. Check out this. Okay. And you don't need software for this. Okay. This is just basic technical analysis. But look at this. All right. This was a weekly chart. Okay. So this is a pretty long-term chart. So anything that happens on this chart, when you get a trigger, it's usually going to last quite some time. All right. So in a case like this, when you break out of the triangle like this, wow, what an opportunity that was, you know, because silver had stayed stagnant for so long, for almost, you know, the entire 2023. You know, you had all the YouTube folks recommending it, that it was going to shoot up to the stars and things like that. But it was in a channel. And then you had a pennant here, and it broke the pennant. And pennants are great because usually what happens in a channel is they get tighter, the channel gets tighter and gets more condensed. And so when prices break out of something like a pennant, it's like a spring, boom. Okay. And that's exactly what happened when the pyramids caught it as well. So, which is our software. So this was a great trade, okay, way back in the beginning of the year, back in this area here when it broke out. And our target on this for short term is 32 roughly to 35. So seem like we're heading on up. My concern on the pullback was we just touched the retracement area, and I had to really, this would have been an A, B, C. You know, usually we may see something like this before it goes. Okay. So yeah, we may not be out of the woods yet, but things are looking pretty bullish at this point. So I'm kind of liking it. So I'm going to recommend silver. And, you know, if you want to play an option on it or something, yeah, feel free to do that. But I would recommend it. If it goes below here, get out, and then we'll get back in. Okay. But this way you don't miss the next possibility to the upside. So we'll put silver down. Just make sure your stop is not so far away that your risk to reward is not good. Okay. NASDAQ, let's see. Why don't we just take a look at the Qs on the NASDAQ here for you. Yoram, good to have you here. Let's see what we got. All right. So here's my situation on the NASDAQ. Again, you know, if you listen to other folks out there, some people think the top is in on the NASDAQ. I kind of think we're not quite there yet. We're in the target area. Now, what I want to show you is this far right-hand long-term chart. This target here is an Elliott Wave 5, and it's based on a long-term trend that started in 2009. So that's a long time. So that's a big, big target there. So when we see a sell-off come after the market ends its bull run, and it could end it at any time, I kind of think if you draw trend lines, we're still up. So it hasn't ended yet. Always stay with the reality of the market. You know, it's kind of like sailing a boat. All right. If the conditions are sunny, but they're predicting a bad storm, all right, you're not going to put your storm sails up until you start to see it happening, right? Same thing with trading the markets. Sail the current conditions, be prepared for the storm, have the right sails to kind of be able to shift when you need to. So I think right now, the reality is we're in an uptrend, could last the rest of the summer, probably through the election, honestly. You're going to have rates get cut probably at 25 basis point in September. and the CPI was kind of helping them a little bit on that release this week. So you're probably going to have rates get cut, and that's going to cause everybody to jump up and down and be happy, and the market's going to go up a little bit further. But at some point, it's going to end, and it's going to end most likely in that target, because 70% of the time, that's where they end. 15% of the time, they're shallow, and then 15% of the time, they get extended. Now, the top of that market of that channel is 637, and we're sitting at 497. I mean, that's a lot of possibility of a lot more movement. I'm not saying it's going up there, but that is a possibility. So I'm not ready to call wolf yet and say the bull market is over. Is it getting mature? Is it getting close to being over? Yes. Okay, no question about it. When it's over, is it going to be bad? Yes, going to be very bad, because this is a major top. All right. Does it depend on who's president? No. Okay, because these tops and bottoms come regardless of the political presidency, honestly. Okay. After the election, could it surge a little bit? Sure. Okay. But it probably will stay in that target zone. All right. Could it sell off after the election? Sure. All right. Because it's already in the target zone. You get it? Okay. So, you know, we could have something change at any time. Something out of left field could come. Okay. Could have a war, a terrorist attack, a virus again. Who knows? All right. But the point is that when it breaks the trend lines and it breaks support levels, that's when we know. Until then, you just stay with the trade. And because there's a storm out there, you know, don't be lackadaisical on your stops. Have your stops fairly close too. All right. So thank you for asking that one. That was a good one to look at. All right. Kevin, how are you, Kevin? Hut. Take a look at Hut. All right. So Hut. Okay. I get it. All right. So on Hut here, you look at the weekly chart. We go back, what is the history on this? About 2018. So hard to get a really good reading. That's actually not a lot of history on a weekly chart. So we went up and we went down. Okay. So this is a great example of, I love to show this when people go, why do you trade? Well, if I was a buy and holder and I bought here and it went up, and then I'm sitting here, you know, 5 years later, I've made no money. Okay. If I traded it, I could have made some money. All right. So anyway, that's my 30-second commercial on the advantages of trading. But in any case here, we've got a green PTF. What I'd like to see is we're breaking off this bottom. I'd like it to clear this high here. If it does, then it's probably going to really go, okay, to the upside. If you want to get an early entry in, yeah, you could go in now, but you're going to have to put your stop in pretty low on the weekly chart simply because it's broken away already. Okay, so, you know, I would put it, this has got, I think, let me just see, these pyramids might be the same. So this low on this pyramid here, because you got to allow for a fib retracement here, okay, or a pullback after a big surge up for profit taking. So you can't have your stop too close. If you're going to get in now, you're late. If you got in early, doesn't matter so much. All right, so the low here is 951. The low here is 755. So use 951. And that's still substantial. All right, I'm not going to recommend it, but I think if you waited for a pullback a little further, you're seeing the pullback on the 60-minute chart, which is why I'm not recommending it. I think you get a better price if you hold off, okay? But I think, yes, I think the thinking of a long position is correct. SOUN, all right. Not much history, hard to get any type of Elliott wave count. All right, so we got a bottom in there. There's the red line because we looked at this before. We've had a tremendous bounce off this. All right, so that's a good sign. It looks like it's going to continue on the 60-minute chart. But again, if you were trading the 60-minute chart, you would have been in under 450, okay, with that pyramid. Because basically these pyramids are looking at the fractals in the market with higher highs and higher lows for bullish, and bearish or lower lows and lower highs. So basically that would have gotten you in a long time ago. So that's the preferred entry. Now you got to worry about being late here, right? All right. So, I mean, you know, where are you going to put your stop if you got in now? That's the question. Are you going to put it way down here? Well, that's 50% less, right? I mean, what are you going to have? One share, maybe 5 shares with any type of risk control. So maybe an option, okay, if they have options on this thing. All right. So I would consider that. I'm not going to recommend it simply because the stop's so far away right now. But yeah, but again, Kevin, both of these are good for the long. It's just how you want to play it. All right. Kumar, let's see. All right. He's long on CMG. CMG. All right. So you're suffering a pullback right now, right? Okay. I don't know what the deal is on that 60-minute chart. It's like flat. But in any case, okay. So if you were, position trading this, you would have been out. If you were going to trade wave 3, right? You would be out by now. Let me just make sure that is wave 3, because that's a higher hump back here. Yeah, that's wave 3 for the most part. Okay, so you're still in wave 3. You can see it on the weekly clear. So let's see where this thing's going to pull back to, and then maybe that'll help you make your decision on what you do with this. So you're pretty close to the target, but it could go down to 48 before it turns around. So just, if you haven't gotten out already, all right, and you want to stay in, I think eventually you'll get a return and more highs, but you're going to have to sweat out a little bit more of a pullback. So I'm going to leave that up to you. Pfizer, PFE. Of course, it helps if I type it right. PFE. Let's see what we got there. All right, so let's see here what we're looking on here. Actually looking pretty decent. So I like to get into markets after they've either sold off or get short after they've really rallied. I try not to pick tops and bottoms too much. You got to have a little bit of caution when you go in. And usually that caution comes in making sure you're having higher highs on the new direction, right? So here's a great example. We can use this at least to talk a little bit about this. So if you had gone in, if you thought this was a bottom and just went in, you didn't have a pullback yet. So you technically don't really have higher highs. But some people would have gone in on this because it bounced off a bottom. All right. It also took out a support here. But then it returned, and actually, I think you still had a negative pyramid here. So, and then it returned and went down. Okay, new bottom. All right, so that trade wouldn't have worked out, right? But now you've got a situation where you came up, pulled back, higher high. That's a good sign, and then came back down. But this bottom's holding. That's a good sign, really good sign. Let's wait, and you got a pyramid entry here too. So you've got a green PTF here, just green. That's not going to help you too much. That's just telling you it's going to go above, what, 29 maybe. And we're almost at 28.99, so another point. You've got a pyramid forming here. And if that gets hit, then our target, our conservative target, believe it or not, is 36.5 to 43. So if you wanted to take a flyer and take an early entry here, put your stop under this pyramid, then if you get a little pullback, you're not stopped out, but you technically have a higher high here, you could do that. If you wanted to wait for a more definitive higher high, you could do that. Okay. So what I would do on this personally is you've got a green PTF, so you are going higher, but I don't think you're going to go high enough to take out. Well, that's 29. You might. Okay. Let's do this. I'll put this down as a buy here, because you have the green PTF on the 60-minute, which will probably drive it above the more conservative top and turn this pyramid green. All right, so I'll put that down as a buy. If that PTF was not green on the 60, I would not do that, okay? And you're already long on those, so stay long. Perfect, right? You got in a little early, probably, but that's okay. No risk, no reward, right? This one don't touch. Okay, red PTFs across the board. Don't go long on this. I don't go against those PTFs because they have a 75% probability. So if they're red, just no No longs. Okay. If you're long in this already, I don't know where you got in, but this is a little concerning here. Okay. Let me open this up here. Not a lot of data here. So here's the tough thing. Okay. This looks like a wave 3, but this has come down too far. Okay. Because this would have been a 1. You're already in 1. So it's very possible this could go here. All right. Personally, if it was me, I'd just get out. Okay. So that I probably would not stay. If you want to put a stop, you know, with the red PTF, it's just like, you know, if you put a stop there, you're probably going to get hit. So I don't even think I would bother doing that. And you got red here. So, I mean, you know, yeah, you may get a little bit of a surge before it comes back down. So I'm going to let it be your call, but I get out. All right. Thank you. All right, Jim, my day trading buddy. Okay. XPYV. Let's see what we got cooking there. All right. So you are long, I'm assuming. Okay. I think maybe trying to figure out a target here on this. Let's see. So we had a 4. Did we have a 4? Let's see. A lot of volatility in this one. Wow. Okay. So the spider is really cranking it. All right. So let's see what we got here. Well, you got a green PTF on that. So you're going higher than the high here. So you're going higher than 50.13. All the charts are bullish with green PTFs. My only problem is I'm not questioning a long position. I'm questioning a target. This is technically below that. I think you're in, I think you got another high and that's about it. Okay. I wouldn't take it. Again, it's a little Russian roulette of when that's going to end. If you got in a little earlier, if you were going to, here's what I do. When I trade a mature trend like that, what I do is I kind of want to get a little more juice out of it, but I don't really want to take a real position trade on it with a stop too far away. I'll use the 60-minute chart. Okay. But you missed the best entry already in the 60-minute chart. So that's why I'd let that go. All right. USO. All right. USO, we've been long in. Let me bring up the weekly chart on that. Okay. So basically our target is 100 to 124. Look at this on the pennant. All right. We got very close and pulled back. So again, once that pennant is exceeded, hopefully to the upside, then we should really start to crank and get up to that target. Now, it hasn't broken it yet. So we may waffle for quite some time. I mean, it's very possible. I mean, look at the dates below. This is a weekly chart. Could waffle for a year before it breaks out of there. Okay, just so you know. So that's possible, but it could break out next week as well. So that's one area to watch. Now, we went long because we saw a bottom here, okay? All right, that's a wave 4 bottom, hit the target really nicely. You know, you have A, B, C correction, so that kind of thing, all right? And then this is the target for the 5th wave up here. So that's kind of where we're at on that, but it's stalling a little bit right now. And, you know, it still is above the 200-day moving average for those that like to look at that. Okay, so there's that. You know, that breakout on the top of the pennant is going to be a breakout probably right above here, right? So that's kind of cool. So I kind of would wait on that and take the breakout unless you're already long. If you're long, just there's nothing to do. Just keep your stops under here. And hopefully you got long where we did way in the beginning. Okay. But I'd like to see that breakout before I recommend it to the group. All right. My pleasure, Lauren. My pleasure. Nice to have you here. All right. Yeah, I've been there. I remember when I started trading. And that was the story of my life, right? All right, PFE buying a winner so far. Yep. UAL covered calls to reduce, get a little cash in to reduce the downside. Okay, I'll tell you, covered calls is a fun thing to do. I did it for quite some time, a long time ago. The problem is that what I used to do is I used to scan for high volatility stocks in the Nasdaq, and then I'd buy the stock and write the calls. I try to buy the stock near a bottom. But the problem I encountered with covered calls is that, and again, I'm going back 35 years, okay? So this is a long time ago. But back then, the problem is I buy these stocks, write the covered calls, and I buy a lot of them, bring a ton of money in the month. But then the stock would start drifting lower, all right? And back then, I wasn't as proficient with risk control as I am now, and I let them slide too far. And so by the time you realize you have a problem, right? So the amount of money I pulled in from the covered calls didn't account for the loss in the stocks. So now I was sitting with a handful of crappy stocks that I really didn't want, because they were just, what I wanted to do is get called out. I wanted to write the calls. Hopefully the upstream that they were in would take the calls out and I'd be done with the stock. So now I'm stuck with 5 stocks as investments that nobody would buy as investments anyway. So you got to be careful with covered calls, okay? But yeah, there's a place for them without a doubt. All right, so yeah, we got PFE as a winner here. Happy Friday to everybody. Yes. Oh, my pleasure. My pleasure. All right, you have a great weekend too. All right, so I think that's it. As I said, we used to do these for an hour and 20 minutes, but they were getting a little too long. So I think about, I don't mind doing, 45 minutes, because we do that, 10-minute intro of the admin stuff. So I don't mind. I like to start the clock after all the commercials are done, so to speak, right? All right, to give you a good 30 minutes of content. So I think that's important. All right, if there's anybody with any last minute ones, I'll be glad to do that. Okay. All right. Yeah. Have a great weekend, everybody. All right. What else can I say here? Let's see. Again, we're going to have a tutorial here in Tucson. So keep your ears and eyes open to that, probably in October. And we're going to do some day trading with some of the prop accounts. And you'll learn how to do that and how I configure my situation up to do that kind of day trading. It's pretty cool stuff. It's fast. And I think you'll learn a lot there. All right, so what else have we got cooking? I think that's it. Well, all right, so that's it for today. Have a great weekend, everybody. We'll see you back here next Friday, same time. And until then, have a good one. I'll put a little music on and put some intraday charts for a minute or two before I shut the room.
you.